Hey everybody, Smart Silver Stacker here. I want to talk with all of you about some recent developments in the ongoing silver squeeze saga that we've been watching unfold for the past 2 weeks or so. There's an article going around that was published on Zero Hedge on Sunday titled "Silver Squeeze Hits London as SLV Warns of Limited Available Silver Supply," and this article is by Ronan Manley from bullionstar.com. And he also put out an article back on the 7th titled, "Houston, We Have a Problem. 85% of silver in London already held by ETFs." Now, BullionStar is a bullion dealership, so it's not exactly an unbiased source of news. However, the articles are really great, and Ronan does a fantastic job of getting into the nitty-gritty of all the market action of the past couple weeks in regard to silver and the SLV ETF's holdings of physical metal. Now, I'm not going to get into the numbers in this video. I don't think you want to hear me rattling off statistics for several minutes straight, but I do recommend you go check out the articles yourself. There are links in the description of this video. The gist of the articles is basically that as a result of large inflows into silver ETFs, such as SLV, of the available physical silver in LBMA's London vaults, about 85% is now spoken for by these ETFs. Basically, if significant inflows into the silver market persist, there's going to be a serious shortage of physical metal to back up the paper claims. Now, this might seem like hyperbole or scaremongering. You think to yourself, well, hey, they still have 15% of that vaulted silver to go, and that's a lot, so things will be fine. Except one troubling detail is the changes that were just made to the SLV prospectus. Let's read one of the new paragraphs that was added on February 5th. The demand for silver may temporarily exceed available supply that is acceptable for delivery to the trust, which may adversely affect an investment in the shares. To the extent that demand for silver exceeds the available supply at that time, authorized participants may not be able to readily acquire sufficient amounts of silver necessary for the creation of a basket. Baskets may be created only by authorized participants and are only issued in exchange for an amount of silver determined by the trustee that meets the specifications described below under Description of the Shares in the Trust Agreement, Deposit of Silver, Issuance of Baskets, on each day that NYSE ARCA is open for regular trading. Market speculation in silver could result in increased request for the issuance of baskets. It is possible that authorized participants may be unable to acquire sufficient silver that is acceptable for delivery to the trust for the issuance of new baskets due to a limited then available supply coupled with a surge in demand for the shares. In such circumstances, the trust may suspend or restrict the issuance of baskets. Such occurrence may lead to further volatility in share price and deviations, which may be significant, in the market price of the shares relative to the NAV. So, JP Morgan, who is the custodian of the SLV ETF, is telling us that silver demand may exceed silver supply, otherwise known as a shortage. Sounds a bit like a silver squeeze to me. In addition, the following new paragraph indicates that SLV may experience volatile price movements that are not correlated to the price of silver. A sudden increase in demand for shares that temporarily exceeds supply may result in price volatility of the shares. A significant change in the sentiment of investors towards silver may occur. Investors may purchase shares to speculate on the price of silver or to hedge existing silver exposure. Speculation on the price of silver may involve long and short exposures. To the extent that the aggregate short exposure exceeds the number of shares available for purchase, investors with short exposure may have to pay a premium to repurchase shares for delivery to share lenders. In turn, those repurchases may dramatically increase the price of the shares until additional shares are issued through the creation process. This could lead to volatile price movements in shares that are not directly correlated to the price of silver. And finally, with this third added paragraph, we are reminded that silver can be extremely volatile, and that supply chain disruptions may result in shortages. The trading price of the shares has recently been, and could potentially continue to be, volatile. The trading price of the shares has been highly volatile and could continue to be subject to wide fluctuations in response to various factors. The silver market in general has experienced extreme price and volume fluctuations that have often been unrelated or disproportionate to factors such as silver's uses in jewelry, technology, and industrial applications, or cost and production levels in major silver-producing countries such as China, Mexico, and Peru. In particular, supply chain disruptions resulting from the COVID-19 outbreak and investor speculation have significantly contributed to recent price and volume fluctuations. So, it sounds to me like someone is trying to CYA in anticipation of a silver squeeze and supply shortages of physical silver. I think there are a few takeaways from these changes to the SLV prospectus. The first is that the powers that be are acknowledging the possibility of a silver squeeze, and even alluding to it in published documents. Another is that I don't really think I want to own any SLV at this point. I'd much rather have physical bullion. And speaking of physical bullion and supply shortages, premiums on American silver eagles are still high across the board, with all the major bullion dealers charging at least a 30% premium over the current spot price. And one thing I'd like to speak about briefly is these high premiums. I've heard a lot of people in the comments of these videos ascribe the premiums on silver eagles to greedy bullion dealers and foolish newbie stackers paying way too high of a price for coins. But look guys, the fact that the silver eagles cost that much isn't because bullion dealers are conspiring to fleece stackers. If they priced them any lower, they'd just sell out instantly because someone would buy them all up and arbitrage them and sell the coins for the actual higher market price. The premium of the silver eagles is a function of supply and demand. Now, I'm not trying to pump silver eagles. I like silver eagles, and they comprise a good chunk of my stack, but they're not the be-all, end-all of silver bullion products. However, the fact that their premium has soared above other silver products is, to me, actually an indication that the silver eagle is one of the most desirable forms of bullion. That's why people are bidding them up. And really, if this is what happens to silver eagle premiums when rumors of a silver squeeze start going around, then what's going to happen when it really hits and silver makes a truly big move up? I suspect that people who are stacking eagles now are going to get their premiums back, and then some, if they sell when true supply shortages of silver hit in earnest. And speaking of true supply shortages, if you've been following the news of the polar vortex and the record low temperatures in the Midwest, you may have read about the skyrocketing prices of natural gas and electricity across the Midwest from Oklahoma to California. A confluence of factors has led to a severe shortage of natural gas, just as a deep freeze settles across the center of the North American continent. Over the holiday weekend, natural gas traded as high as $600 per million British thermal units in Oklahoma, and prices of electricity in Texas spiked by over 2,600%. This type of crazy price action is just what can happen when a critical resource in high demand becomes unavailable. Shortages occur, and any product that does make it into the market gets bid up astronomically as buyers will pay almost any price to take possession. And in market conditions such as this, if I owned a commodity that was experiencing a shortage, I would personally feel much more comfortable being in physical possession of it rather than owning some form of paper title to it. Just some food for thought. And also a great example to demonstrate that shortages of critical commodities can occur in the blink of an eye. And once they happen, it's too late to get on board. That's why, to me, the time to stack is now. And that's exactly what I'll be doing going forward. If you liked this video, and you'd like to hear why I think silver stackers can afford to wait for a silver squeeze, then check out this video right here. And I want to thank everyone out there watching. Thank you so much for the encouragement, the comments, even if you disagree with what I have to say. Thank you very much for participating in this conversation. Keep the comments coming, guys. It's my favorite part of making these videos. I'll catch you next time. Smart Silver Stacker out.